I want to see those big ass candles.
Yeah, I'm looking at AMC too. Like it's just like pushing on that thing.
Hello, hello, hello. Hey, everybody. It's True Demon, the Devil Stockbroker. Thanks for joining the live stream. Let's go ahead and get straight into it. How's everybody doing this morning or afternoon? It's morning for me.
Doing pretty good.
Making money, baby. Making money.
Good to hear it. All right, let's catch up with everything. So, basically, everything is just absolutely skyrocketing right now. AMC is looking nice and strong, completing a cup and handle pattern on the daily chart. Nice big cup and handle and big boom boom candles. A little bit easier to see on the 1 hour chart. You can see it right here. Cup, handle. Now we do have some ABCD waves showing up here that shows that there needs to be a little bit of downside to AMC's chart right now. After a move like this, not that surprising, especially going into Friday. Doesn't mean that it won't continue going on into next week, but at the moment, going into Friday close, it'll probably do some retracement going into the close of the day. You know, day traders taking profits and so forth. So if you've got some calls that are currently in the money, consider exercising those if you want to hang on to those shares. I know we got a lot of people that made some massive bank right now. Big shout out to Chef Pew Pew, one of the local mods for Hell's Trading Floor, who just the other day purchased 19 and a half strike calls for AMC in anticipation of earnings and made a massive 4,000% profit. That's
Killed it.
That's an amazing killer trade. So huge congratulations to Chef Pew Pew. Claps from everybody in the trading floor. All right. If you're just joining the stream for the first time, please go ahead and give the stream a like and consider tweeting out that we've got this thing going on. If you follow me on Twitter, I've already got the link up there on my profile. You can go ahead and just retweet it to get the word out and get some more people in here to hang out with Hell's Trading Floor while we make bank. Okay, so let's go ahead and catch up with all of our other plays. So Revlon, like I said, there's big support here at 750, and I do apologize for my dirty chart, but the big anticipation that I've had was for it to break this descending triangle pattern to the upside, and it did follow through. So it broke this triangle to the upside today, and it found support well above 750, which is excellent. I was hoping that it would maintain at least 775, which is this dashed yellow line here. As long as we close above this level, then comfortably we have a good portion of about 50% of the float closing in the money calls on the call chain. So let's actually go get a quick update to see what Revlon is closing at with its live options, just to go get everybody a little bit more excited. All right, so Revlon, currently the calls are at 62% of the total options market right now. Looking at our live chart for options, you can see that we have a massive amount of support here for Revlon. It looks like it got cut off. For whatever reason, the August 5th call chain is not showing up. Somebody, if somebody could kindly in the Discord just let Flab know that this bug is here. For whatever reason, on Friday, it looks like it cuts off the most recent expiration. That's a little bit strange. I would like to at least see these options if they were available. But if somebody could go ahead and just send a quick bug report to Flabbergank, let them know that that happened. But anyway, the big news here is that we've got a ton of calls that are currently on the chain for this Friday. I'm going to go ahead and go look over on my other screen at my Fidelity chart and just quickly count up where we're at with open interest on Revlon. Let's go see. So Revlon calls. All right. So most of the in the money have either been exercised. It looks like most of them have been exercised. There's still a few thousand that are in the money right now for this Friday. Above $8.50, there's about, let me just go quickly count these up right now. I'm going to count every single option, every call option that's available on the chain between $8 and we'll say $11 because that's about all that there is that's worth counting. Okay. So there's 23.6 thousand call contracts out of the money right now. That's worth about 2.36 million shares of Revlon that are expiring out of the money. If we can't get Revlon to close above $11, that's a huge lofty goal. So just saying, hey, General Disarray, thank you for the $5, my dude. I will pass your message along. General Disarray says that he appreciates all that we do for myself and the mods at Hell's Trading Floor. Thank you so much, dude. Really appreciate that.
We love you, brother.
All right. So taking a look back at the chart, obviously it's a very, very lofty goal for Revlon to close even above $8.50 at this point. We're coming into Friday close. If we did manage to close above $8.50, then that would put an additional 2,623 call contracts in the money. That's worth about 260,000. Yeah, 260,000 shares worth of calls that would be expiring in the money. Right now, looking at the call chain, I'll count everything down to $7. All right, so between $7 and $8, there are 6,632 call contracts, which is worth 663,000 shares, will be expiring in the money if we stay above $8 for the rest of the day. That would be an awesome close for Revlon right now. I'm assuming that they'll be probably pinning the price around $8 since the market makers have quite a lot of put contracts that are open below this price. But ideally for them, they would want this to close at exactly $7.99. That would be their ideal max pain for this Friday at this point. Most of the deep in the money contracts have already been exercised. So anybody who took profit on Revlon or exercised their calls, congratulations on the huge win. Right now, this stock does look primed to keep on moving. The gamma ramp is intact, and you can see that based off of this chart here. We've still got about 25% of the stock's tradable float between our current price and the $10 strike on August 19th. So if for whatever reason Revlon keeps on moving and we close above $10 that Friday, August 19th, then that would place an additional 25% of the float in the money for Revlon. That's an excellent position to be in. If you're short on Revlon, or if you've sold calls on Revlon, especially the naked calls, those are what are most dangerous. I'm betting that right now market makers have been scrambling to get those under control and close those out while this price action has been going sideways. The good news is that Revlon is still consolidating very nicely here on this large triangle pattern, and it did break out to the upside. So moving back to the chart. Now that we have broken out past this triangle, which I'll go ahead and shift this to a green line here. the next step is for Revlon to make a slow grind to the upside and start to retest that $10 level that it got rejected from at the top of the triangle. So that's the next natural move since it's broken past this level. You can also look for other patterns. I'm looking for harmonics lately. I find that harmonics have been pretty accurate on this particular chart, especially on hourly, 15-minute, and daily time frames. For example, on the 1-hour time frame, we had an ABCD wave, which is basically an Elliott wave pattern based off of Fibonacci sequences that called out that Revlon was looking bullish the morning of August 1st, which was the day that it moved. That's just happenstance, from my opinion, but it was a bullish. It was a bullish move that was actually carrying forward before the news of the bankruptcy loan that was being offered by the courts. So that's an excellent, excellent, excellent piece of news. Let's go back to AMC right now because it's absolutely thrashing shorts at the moment. The covering that must be going on right now. So we may as well be talking about what's going on with AMC here. Oh, looks like Biora is going too. That was an accident, but we'll go back to AMC. Looks like Biora is killing it too. All right, let's go take a look at AMC's short squeeze gamma ramp because I want to see where AMC looks like it's going to head to in the near term. So this is awesome. God, you guys are going to love this. All right. So check out AMC's gamma ramp, and you can see that right now where we're currently at, 6% of the float just about is currently in the money because we've pushed all of those 20 strikes and below into the money. That's an excellent place for AMC to be. And I don't know if you noticed this, but this is one of those harmonics patterns that I was just talking about here on AMC's 15-minute chart. This is a bat cipher, which is bullish because the high points of the Fibonacci's. It's kind of hard to see it, but there's essentially Fibonacci retracement levels here on this particular chart. And you can see that the bat pattern follows the bottom all the way up to top here. It retests the 6180, retests the 2360, and then comes back down to the 7860. Once it goes through its consolidation phase, you expect upside on that harmonics pattern. So that's the basics of the harmonic pattern. If you want to learn more about that, I strongly advise just going out, Googling it, or looking at a trading book and learn about harmonics. They're extremely accurate patterns, if a bit difficult to find since you have to do a lot of studying with fibs. But nevertheless, it's been really good, and you can look at harmonic patterns and get them called out on your TradingView chart for free if you have a subscription with TradingView. So you can get this off of the free version of TradingView. If you'd like to support Hell's Trading Floor, we actually have an affiliate link down in the description of this video that you can use to sign up for your TradingView account. And if you do end up getting a pro version or anything like that, Hell's Trading Floor will get a slight bonus from your subscription. If you do decide to do that, we'd very much appreciate it. I love TradingView. It's a really, really nice charting system. It's definitely the best. It's actually the same charting system that Webull uses. They won't tell you that, but it is. It is the same exact chart software. So AMC pushing $22 right now. Going back to that gamma ramp that I was describing earlier, if you look at AMC's gamma ramp, you can see that this is covering all of the call contracts between this Friday and September 16th. There's a lot of call contracts on August 19th that are expiring in this range, but September 16th is one of the big ones. And if for whatever reason AMC's price managed to get past $40, then that would place more than 8%, more than 9% actually, of the entire tradable float in the money. So most of those calls are most likely naked calls sold by a market maker. If that buying pressure continues, then this gamma ramp can absolutely carry AMC's price. Because it has such a very large float, that is going to result in enough buying to put at least 50 million shares worth of buying pressure that needs to be covered between now and September 16th, assuming that we were able to challenge that price level. So there's a big ramp here in front of us where we can very quickly ascend from $20 to $40. If you see that happening, I guarantee you'll be finding a lot of FOMO coming into the options market. You'll see tons of flow pushing AMC to the upside. If this holds this price for this Friday, you're going to see a ton of calls expiring in the money, which will be fantastic. Just absolutely lit for AMC. All right, let's go ahead and check out Biora since that one's been a popular ticker for us for a long time. It's finally breaking out beyond 80 cents. I've been waiting for this to happen. I don't believe there's been any news so far. This seems to be just organic buying, probably from an institution. I'm betting somebody knows something because we saw this volume starting to come in yesterday in the late trading session in the afternoon, and I was getting suspicious. So, man, this thing's looking so strong. Everything's looking so strong. Carvana's earnings were absolute crap, and their stock, for whatever reason, is launching itself into the stratosphere. I've been
AMC crossing 2250.
2250.
Rizzler, there goes those candles I was telling you about.
Oh,
There goes those candles I was telling you about, Rizzler, right there, bro. Those right there, that's not retail. That right there, those are shorts. Those are algos kicking in. Retail carried this thing all the way up to the top. Now it's the algos time to kick in. Let's
Yeah,
go.
Look
that's
at
volume.
this. AMC is carrying itself to the moon, y'all. All right. Let's go check out the charts. Okay. All right. Look at this. AMC completing an intraday cup and handle. We had a retracement where you see that butterfly. I'll go ahead and turn that off so that you can see this. But currently we got a clear cup and handle pattern showing itself. 1, 2. So this intraday cup and handle is actually just as strong as the last one that I had called out earlier on this morning. That one is a daily cup and handle pattern that's actually breaking out of this regression channel. So now that AMC is showing all this strength, I promise you're going to see some FOMO kicking in here very, very shortly. All right. Oh man, AMC is just absolutely skyrocketing. Those shorts do not want to pay that goddamn dividend. I promise you that. That is what's going on right now. Nobody wants to be paying that equity dividend because it's
Can
so
you explain that?
Yeah, absolutely. So let's actually go ahead and clip this out, and let me go get my clock on here so that I can write this timestamp.
Yeah, I'm gonna throw another bid for.
Here we go. All right. Okay, so let's go ahead and go into what is going on with the AMC dividend. All right. So a lot of people are very confused about what's going on with the dividend versus like the GME split, and like it's some people are saying it's just like the BBIG Cryptide spinoff dividend. It's its own thing. Okay, so AMC has currently it has one equity, right? So AMC has Class A common stock. All right. This is your AMC shares. All right. And that's what the Class A common stock is. Now, over here, we're about to go ahead and create a new equity called APE. That stands for AMC Preferred Equity. Now, what AMC Preferred Equity actually is a preferred stock. That is a preferential stock which kind of acts as a secondary equity for the company. Now, the thing is that these two equities are totally separate. They have their own price. AMC is currently trading at $22.40. And what APE is going to be trading at when it opens on the market is 1 penny. However, because these are separate equities, once APE goes onto the open market, and every single one of these shares are going to existing shareholders. So for every share, this is a 1-to-1 dividend. This is a 1-to-1 dividend. So this 1-to-1 dividend means that for every share of AMC, you are gifted. This is a gift from Adam Aaron to every single one of the apes. 1 share of APE. Now, you might look at this and say, like, big fucking deal, demonetized. I'm only getting one. I'm only getting 1 cent.
I told you.
Quiet. I don't want to hear it. All right. So you might be thinking, big deal, I'm only getting a share that's worth 1 cent. Well, here's the thing. Apes are going to go onto the market at 1 cent because that's the par value of the stock, but that's not what it's going to be trading at. See, you are going to be the only holders of this equity. When this goes out, it's only being issued through a dividend. They're not issuing any additional stock, at least not right away. So because of that, Ape is going to trade at whatever the market decides it's going to trade at. So all of a sudden, if you have a situation where all equity holders of APE turn out to be retail shareholders, you can dictate whatever price you want. If you want to set a limit order for $10,000, just throwing out a ridiculous number, by the way. I'm not saying this is what's going to happen, but like say you put a limit sell for $10,000, and if somebody buys that, then that's what the price is going to be. If somebody is willing to pay that money for it, that's what the price is. If you really believe that the AMC apes are the ones that own all of the stock, then you're the only ones who are going to get this equity. You dictate what the price is. You get to decide what you're willing to sell it for. If that's what happens, then you decide what the price is. And whoever's willing to buy it at that price, they dictate what the market price is. That's the traded market value. So the chances that Ape stays at 1 cent, extremely unlikely. It's just not going to stay at 1 cent. But that's the issuance cost for AMC to actually generate this equity. So as a result, AMC is they're paying 1 cent per share of AMC in order to create an equal share of APE. And this is what it will cost AMC in order to generate that equity. And you are welcome to pay whatever you want to get more of it. Now, here's the other thing, is that because you're getting this equity and it's going to be delivered to you at cost for AMC, AMC is going to be paying 1 cent to you in order to be entitled to that, all right? However, you're also, if you're in the camp that says that there's naked shorts, and you could say like it's you could say that it's 1 billion naked shorts or whatever, you can say whatever you want. We don't actually know how many naked shorts there are. There's no way for us to know, but let's just pretend that there's like 1 billion. So that would be 3 times AMC's float, right? So if there's 1 billion naked shorts, you add on the 500 million plus change shares that are out there. Guess what? Everybody who owns an AMC share, whether it is an IOU or a synthetic share or not, they're entitled to this dividend. They're entitled to receive these. So this is where the shorts and brokers get into big fucking trouble. The shorts only have to pay the money, the cash in lieu of a dividend in order to maintain their position. So the shorts only have to pay a cent, but that's not who really gets fucked in this situation. The one who's screwed is actually the broker. So the broker is the one who lends out all the shares. So that means that the broker is on the hook for all of these shares to be delivered to everyone who's entitled to APE or the Class B stock. So because of that, the broker now needs to satisfy that settlement. The broker needs to actually put 1 ape in each person's account for every share of AMC they hold. And if APE is not, if there's no shares available to actually do this, then the brokers are on the hook to deliver it at whatever the market cost is. So whatever happens, no matter what AMC is trading for, no matter what APE is trading for, the brokers are going to have to deliver on every single share that the shareholders are entitled to of APE. So if there's 1 billion naked shares, then they need to deliver 1 billion shares of APE, regardless of whether they have any in their account. Now, you can hypothesize that brokers are able to do this. You can just say, oh, well, they'll just generate more naked shares. But here's the thing. That's a liability on the broker's books. They still have to document this, okay? So these are still a liability. Naked shorts equals a liability. And in order to offset your liability, you need to have collateral. So what is collateral? Collateral can be a few things. Collateral can be the shares themselves. You can actually hold shares and they can act as collateral. You can hold other things such as alternative equity, such as shares of another stock. This is the same concept as when you hold margin in your account, and your margin is determined by the equity value of your total stock that you have in your portfolio, and the margin is the cash value that you can trade loaned against and collateralized against the equity of your account. But how brokers do it, they tend to actually buy something very specific. It's called T-bills. These are treasuries. Treasuries that are backed by the federal government. Treasuries specifically that are less than 1 year to maturity. Their favorite type are 6-month T-bills. This is the collateral that brokers need to have on their books in order to make sure that they have collateral against all of the loaned out shares that they have. If they're lending out shares, they need to have collateral to serve in case they need to deliver monetary value. If for whatever reason they must be forced to deliver, they need to have enough T-bills or some other form of collateral in order to cover their costs. So that's what's going on right now. Brokers are either unable to get this collateral because right now there's a shortage of T-bills in the market. As of late, T-bills have become more and more expensive. Recently, the yields have been going up, which indicates that there's a lot of selling of T-bills going on in the market, but that's not what's important here. The important thing is that the collateral needs to actually be something that holds value, and that's going to get expensive for the brokers. If they're not generating any money off of this, which they are not, because this is an equity dividend that's being gifted by the company, then the brokers need to come up with this liability collateral. They need to come up with the collateral to match this liability. Otherwise, they are essentially in default. If their books are not balanced, then they will be forced to either buy back shares of this, or they will need to cover forcefully. They will need to force their short sellers to cover their position by recalling shares. So these are the possible scenarios that can play out as a result of this occurrence. What Adam Aaron has done is basically put the screws to the broker. They're demanding them to. Adam Aaron has basically issued an ultimatum to brokers to put their money where their mouth is. If there are actually that many shares of AMC and you are 100% certain that you have only lent out the appropriate number of shares and there is no counterfeiting going on in this stock, then prove it. You will issue 1 share of APE, a secondary equity, to every single share out there on AMC. And what you are seeing in the price action right now is serving as evidence, not proof, but evidence that they do not, in fact, have that equity. They do not have that collateral, and they do not have any way of actually delivering the appropriate amount of shares to sellers. Now, retail could be driving a good bit of this volume, but what I suspect you'll find is that as brokers they slowly come to realize just how much liability in the form of naked shorts they have on their books, they will be forced to get rid of that liability and offset their risk, either by buying more collateral, which is going to cost them money in a market which is already experiencing a massive shortage of T-bills and collateral. This is a thing that's really going on. If you want to look it up, there's plenty of other YouTubers that are describing it, and I'll try to do a video on this at a later time. But there is a collateral shortage going on right now due to things like rehypothecation of shares. This has been going on for quite some time, and it's an ongoing problem in the market. I'll try to do a better job of explaining this in a future video, but that's all I've got for now. So thank you for watching. Have a hell of a time in the markets.
Let's fucking go.
All right. I got that marked down.
Let's go. We fucking moving, Jack.
All right. I've got my timestamp set up, so I'll go ahead and I'll cut that out of the recording later on, and that'll be its own video. Thank you guys for bearing with me while I went and took care of that. That's an excellent question. Yeah, no worries, man. No worries.
That, for real, bro. For real. I really appreciate that shit.
All right, cool.
Motivation like a motherfucker.
All right. So, all right, let's see. Only sell ape for 420. That would be amazing. That's the thing. So since AMC retail shareholders are the ones who are receiving this dividend, this is where things can really get fucking crazy. Okay, so if collectively, upon receiving the dividend, AMC shareholders, if we were the only ones that actually held on to APE, if we were the only ones who had it in our portfolio once it settles into our accounts, you could technically do something like you could have everybody just place a sell limit order for $10,000 or something insane like that. And if there was enough demand for the price at that level, then the broker would have to list it at that price. They would actually have to place that on the order books, which is hilarious. And you would see, like, you could see thousands or even millions of shares, theoretically speaking, up for sale at $10,000 for APE, which would be funny. And I'm not saying that this is something that's likely to happen or even that it should happen, but that's essentially how the order book works. That as long as there's enough demand for the price at that level, you can set the price to whatever level that is. Yeah, thank you for the reminder, General Disarray. Yeah, only one F-bomb per hour.
Exceeded.
We have definitely exceeded the threshold. I guess we'll just see how YouTube feels about that. All right. Revlon is looking nice and strong. Carvana surprised the hell out of me today. It really did. I should have taken a position on some weeklies. The earnings this week have been insane. Just looking at the sentiment of everything. Oh, I actually need to go over this. SQs and the Nasdaq. I've been looking at the Nasdaq. I wanted to put this bet out here in front of everybody. So I've been tracking the Nasdaq, and right now, I think that the Nasdaq is about to collapse. So right now, Nasdaq is forming a very large head and shoulders pattern right now. Okay, let's go ahead and draw this out. Got a head, shoulder, shoulder, head, and I'm expecting it to form another shoulder at some point over here in the future, over the next several days. Right now on the 15-minute chart, it seems to be finding some support along its 100 period moving average of the 15-minute candle chart. But if you look on the daily, the Nasdaq is way overextended. Okay, it's been trading above this regression channel for about 5 days, and I feel like it really has to come down. I set up two possible cases. I had two bull cases actually. me see. I'm going to go ahead and close out that alert. I had marked out two possible scenarios where NASDAQ could actually continue and bounce up to the top of this regression channel, and then collapse to the downside, but it doesn't look like it's doing it. So what I had seen was on the 30-minute chart or the 1 hour, you could look at either one, but there's a double top here, okay? And this double top is very bearish. We had a MACD cross down here, and then the price kept moving up through consolidation, and the MACD is crossed again right here. So this is bearish right now. We've also got bearish divergence on the RSI, which furthers the thesis of a bearish move to the downside. I'm actually setting price targets at around 12,500 or so. If you want to be a little bit more conservative, 12,800 is a lot better. And that would still set you up right now for like a 2-to-1 risk to reward ratio. So if you're looking for a nice trade on the NASDAQ, this is what price targets you might be able to set for yourself. Now, the NASDAQ is super freaking expensive. So rather than actually trading on the NASDAQ, what you do is you go long on SQs. So the Qs, that's the Invesco Q NASDAQ index. It's an ETF that tracks the index. The SQs is the inverse leveraged ETF of that particular ETF. So right now, because if you look at the NASDAQ, NDX, what you can do is you can place NASDAQ, put NASDAQ on new price scale on your trading view, right click on your scale here for the NASDAQ and do invert scale, okay? Bear with me here while I get this worked out. If you match up the chart so that NASDAQ scale lines up perfectly with SQs, then you basically have a pricing model for what the SQs can get to. So like I said, I'm short on NASDAQ, and I'm estimating that NASDAQ can go down to about 12,800. So my price target would be right here, and that puts it on the SQs at $42, almost perfectly. Set your support or your stop loss down here just below the bottom of the candles, and essentially what you have here is an inverse head and shoulders. Now I'll go ahead and take away the NASDAQ chart. And this is how you can match up the NASDAQ against SQs or any of its other ETFs. But if you're doing an inverse ETF, you have to inverse the NASDAQ scale. And now you can see there's an inverse head and shoulders that's beginning to form here. So as soon as you see a bounce off of this trend line right here, then you know you've got your confirmation. So keep an eye out for it. I'm basically looking for the price to do, come on, man, just delete the line. I just want it gone. Go away. So I'm looking for the price. Trading View is really fighting me here. I'm looking for the price to bounce about here and then retrace and then go back up at least to the 42 level on the SQs. So this is my bet for a short on NASDAQ. The way that I'm treating it is if the SQs break $38, then that's my confirmation. So this is a nice quick swing trade that you can look at for short against the tech sector. Since NASDAQ is very tech heavy and it's got a lot of high beta, that's high volatility stocks. And you also have like big tech sector names like Google, Amazon, Apple, Netflix, Nvidia, Tesla, Microsoft. They're all in the NASDAQ as well. So if the broader market on the SPY goes down, the NASDAQ's going to come down even harder because NASDAQ is so tech heavy, and these big tech names, if they start going down, then the rest of the tech sector is going to sympathize with it. So that's my trade for the NASDAQ. Short on NASDAQ either by going long on the SQs or shorting the Qs in order to capture that $4 move on SQs. So I've already gotten my confirmation. I'm already satisfied with this move to the downside. This chop and volatility, I'm looking at this and I can easily see it's a nice bull pennant. So you got this big move here, large symmetrical triangle on a reversal trend. I'm thinking break out to the upside, consolidation into the shoulder, and then continue to the upside and break out at least to $42. It could be max profit, I'm estimating at like $46 for the SQs. That would be a pretty catastrophic move for Nasdaq, but it's done it before. Like if you just look at the SQs for the last couple of weeks, we've had some pretty huge swings in the market. And if you follow a cyclical pattern, I'm betting that it'll go ahead and make another downturn. We're still in a bear market right now, so Nasdaq is not doing very well. Tech sector is actually getting hammered pretty badly. So at the very least, I expect that pattern to continue to the downside. Some other cases to watch out for, if you're looking at the daily chart on the SQs, you can match this up with the Qs and just basically reverse the patterns. But you've got the RSI trending down towards the oversold line. You've got the MACD, which is very low and getting ready to cross on the daily chart, and the STC indicator has been red for a protracted amount of time. So all of these indicators show good sign of a reversal on the SQs. If you look at the Qs, you'll see the exact opposite playing out, where the Qs have been green for a long time. The MACD is about ready to cross down, and we're forming a inverse, or we're forming a head and shoulders here on the short term. And if you actually draw this out, you'll find that we're currently trading in an ascending wedge. So this is most likely to break down here very, very soon. Okay, so that covers my NASDAQ, Qs, SQs trade. Big thanks to Cadude, actually, DM Calls. He's been focused a lot on trading the Qs and the SQs, and he's been making some serious bank for his followers. And he's actually opened up my eyes to trading these indices more consistently. And I got to say, really happy with the improvement in my performance. Okay, Revlon overview. Sure thing. We can go ahead and take a look at that. I'm sorry, Smooth Stocks, for you. I don't have any new news on BBIG. We're just going to have to wait for the news halt to end. That's going to be up to the NASDAQ. That's not up to anybody else. Zash, Vinco Ventures, it's not up to them when they decide to unhalt it. It's going to be dependent on whether they remove the suspension of trading once they've been satisfied with whatever information it is that they're asking for. Okay, let me go ahead and remove these session breaks just to clean this chart up a little bit. I know this is a very dirty chart right now. Tell you what, I'll remove the liquidity indicators. Let's remove the smooth moving averages. Actually, I think those are exponential, but not important. And I have way too many support lines here on Rev that need to just be deleted. Delete, 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 delete. And this channel is no longer relevant. Okay, cool. All right, that's much, much better. I like that. All right, so looking at the volume on Revlon, we see that we had this big pickup down here after the bankruptcy news had originally been announced. It broke this bat pattern. This is a bearish cipher pattern that was showing up on Revlon. It broke that pattern and kept going to the upside and then retraced into a bull flag, and it consolidated for a long period of time. This is actually quite a nice bullish structure. Not sure why this is red. There we go. So after this consolidation had ended, right at the bottom of the box, Revlon took off on the news that it received a 1.4 billion, bankruptcy court loan. So that is to give them a little bit of time in order to get right with their lenders and to continue operations in the meanwhile so that they have a chance to actually make their deliveries. Looking at this new descending triangle that is formed on Revlon, you can see that it's basically formed a bull pennant. The one thing that we had to watch out for is this line of support right here. This flat level of support is what's forming what you could consider a descending triangle. Typically, descending triangles are continuation patterns, but descending triangles lean bearish because they have a flat area of support and the resistance is lowering over time. So the concern is that Revlon is going to break down below this level. However, it looks on the 1 hour time frame that Revlon is actually pushing to the upside. So if you actually include the off hours trading session, you'll see that it's already broken this pattern. However, if you look at it on without the after hours sessions, it's still there. So it's broken it in the extended hours session, but it's still within it on the regular trading hours session. So we need to see what happens. Currently, it looks as though it's moving into a bullish trend and preparing to break out of this channel, this triangle, which would be very bullish. If we see this move to the upside, break out of this triangle, then I'm anticipating us to retest resistance at $10. It's all going to depend on what happens here in the near term, but right now we've got very low volume and good consolidation. Support here at $7.50 is strong, which is what I wanted to see. And we have not broken below this. We've only wicked below and established clear levels of support every single time. And as a matter of fact, looking at this, pause for a second. I've got a blender going off in my kitchen. Okay, blending is done. All right. Sorry about that, guys. All right, so looking at the bottom of this triangle pattern, what we actually see is rejection of this support. The price doesn't like to stay down here, which is a good thing. These wicks are telling us that on the 1 hour time frame, every time the price got pushed below this $8 level and pushed anywhere down into this zone, it was rejected right away. And what this has actually formed on the hourly chart is a triple bottom. You can look at it on the 15-minute chart and you can actually get a clearer picture of this. So right now, the triple bottom is right here. I guess actually you might call this a double bottom. But it never broke down into this area after it had closed on this support of 730. It wicked down, bounced up immediately. It tried to come down and it retested this level at $7.40, but it wicked up and bounced again. And this time it's bounced up one more time after it tested as low as $7.35. So the price doesn't like to be down here. There's clearly strong support here. You got a lot of liquidity from buyers just waiting to scoop these shares up. So I suspect that these moves, these pushes to the downside, have been an institution trying to drive the price down so they can scoop up shares as cheaply as possible. Demonic smoothie time. I think it's actually my wife making an iced coffee right now. Can we get an update about Excela? Yeah, I can do an update on Excela. So I know everybody's kind of nervous about this one. Right now, I can tell you that there's some pretty good news in that the company has issued some new guidance and presented a new 8K filing with material changes to the company. We've got earnings coming up as well. But the news from Excela shows that they are establishing some new contracts. So they won a $6 million contract for bills and payments after a long 2 weeks of silence. And since we're trading up so much higher than $1, we're comfortably above $1. So the chances of a delisting at this point are it's not certain yet, but we're very close. And as long as Excela doesn't close below $1 in the next 2 trading days, then we are Gucci. So currently we've got 1, 2, 3, 4, 5, 6, 7, 8 days behind us, and this is the 9th day. So after today's close, as long as we are closing above $1, and it looks like we're pretty comfortably above that level, then Excela only has to close above $1 on Monday next week. And that means that the concern of delisting is behind them, and they have secured themselves, at least for the time being, to regain their business footing and continue working on providing shareholder value. Now, I'm still a little bit irked with the executive chairman Parchata. I'm not a big fan of his method of running business, and I am aware that he has been accused of pumping and dumping his stock and diluting on shareholders. And as much as it sucks, I still see value in the company. So regardless of Parchata and his business management methods, I still think that the company can actually perform quite well. It's just that right now it's not looking like it's in a healthy place because of, the reverse split and all of that. However, the company at the time, as of this moment, is trending towards profitability, which is the whole thing that has been holding Excela down for a long time, is that they haven't been a profitable company. They've been absorbing more and more debt and diluting on shareholders, which is really their biggest, it's really the biggest weight around their neck. It's kind of like an albatross around the company's neck at the moment. But looking at what the chart is currently doing, let's go review some of the technical patterns and see what we can see. All right, so I'm going to put this thing into a regression channel, and we'll see if we have anything that we can glean from this. So let's go start with a regression channel down to here. All right. So according to the regression channel, the company got punished down here right before it made a sudden bounce, and this was mainly because the market was selling off here. The market was absolutely getting just punished due to a whole bunch of bearish news and the Fed tightening announcement and things like that back in December, January. But they bounced shortly afterwards, and then they made their equity offering, converting Class A common stock to preferred shares here in early March. So those two events helped the stock, and that is what established the outer bounds of this regression channel. So we've been trading just below the red line, that's the midline on this regression channel, and been holding steady on our downtrend. Now what I'm seeing here is that we are finally establishing support and bouncing off of the bottom of the price for Excela. If it can move to the upside and challenge the top of this regression channel and hold support, consolidating outside of it, then I'm confident at that point that Excela is going to be just fine. This is a long-term trade, okay? This is not a quick swing trade. I pointed out gamma ramps on this, but the gamma ramps extended all the way out to January of 2024, and that was part of my thesis. So if you're expecting this thing to squeeze in the short term, I'm very sorry, but that's not what the play is. This is a long-term hold, and it was a value play. I made sure that I was communicating that this is a value play, all right? Now, yes, the reverse split sucks, and it pushed the price down, but it's established support, and the company has basically secured itself from delisting and given themselves time to get profitable. I'm estimating that their next earnings, which is coming up on the 11th of August, are going to be bullish because the company is likely to post at least a upward trend of earnings profitability. They may still post a negative earnings, and that's not the end of the world. What's important is that they show that they are improving their earnings consistently, which they have been doing over time. If you look down here, their earnings on this chart right here, you can see they've been slowly edging up towards this zero line on their earnings. If they can break above that, then that means that the company is profitable. Where it currently is, the company's estimated earnings per share is expected to be at negative $1.20 per share, and that's accounting for the reverse split, okay? Now, if this has been very, 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 very close to going profitable. This company just announced in the last quarter that they received huge contracts, one of them for $136 million per year, and that's a 4-year contract with their new client. So the thesis shows that Excela should post profitability, if not in this quarter, then in the next quarter. And this company is insulated in a recession because their business model relies on companies outsourcing labor. Companies that are doing badly in a recession and laying off staff are still going to need work to get done. And Excela focuses on task automation and business process automation for other larger firms, as well as automating things like payment transactions and cash handling. All of those factors of Excela's business model make it attractive to attract new clients and customers to start paying them to do all of their busy work, and that's money in the bank for Excela. If we go into recession and the layoffs get worse, Excela actually benefits from this because they have a lower cost of labor and they provide task automation that make large businesses with a deep pocket of cash willing to pay that money for Excela to take care of all of those tasks for them. So that is the thesis here for Excela. They've been posting an improved price to earnings ratio, good book to value, and their financials have been improving consistently. The reverse split sucks. I know it sucks. I know the dilution sucks. But you have to have some trust and faith that the company will play out and actually return value on its play. Further to that point, the company's actually on the reg show list right now. So I went and saw this the other day. Excela got shorted the shit out of it. So let's go take a look at that. Go pull this up. Excela currently has an estimated short interest of free float of 61.4%. This is accounting for the reverse split. The company got absolutely hammered going into this reverse split. And right now, after getting hit so hard recently, the short thesis might be unraveling because they were expecting this company to get delisted. If it doesn't delist, if they can't shove the price down below $1, then it's going to rubber band back in the other direction. And you only have until Monday close. If Excela skyrockets and blows past its previous position after the reverse split, then shorts not only are wrong that Excela is delisting, but they also end up losing money. Every ounce of cash that they poured into shorting this thing right at the reverse split will be gone, and they will be in the opposite end of the trend. They will be fighting the trend. Excela was already starting to show signals that it was preparing for a reversal, and all of it hinges on them showing an improvement on their earnings. If they beat expectations, if they prove that they are going profitable soon, if they're able to issue new guidance and show that they have been increasing their number of clients and contracts, then this is going to turn around quickly. I'm not promising a squeeze. I'm not promising anything. I'm simply telling you where the value is for this company, and I believe it is undervalued. That's just my opinion. So currently, if I go ahead and look at the short interest a little bit closer, and we go ahead and move utilization up, we see that the utilization skyrocketed here from 31.9% as of July 28th up to 100% as of August 2nd. Suddenly, the stock went on the threshold list. So shares are not being delivered right now. Something else is going on. And whoever is having some trouble right now is not able to cover their shares. Also notice that the short lending, this is security lending volume, this bar chart down here, fell through the floor. Now, this is likely because the reverse split reduced the number of shares that were traded in the market. However, they're all out now. They're all out of inventory. There's no more shares left. There was already so few shares available to trade on Excela while it was diluting, while it was at sub 10 cents, that it didn't make sense for it to be able to continue trading at that level and for shorts to still be available. So they were already trading with short shares that shouldn't have been available at that time. And now, because of the reverse split, there's a demand for delivery going on because everybody wanted their shares back and they can't get them and they're not getting their returns. So now all of a sudden the stock is on the threshold list. The stock is at 100% utilization. Obviously something's going on. We don't know what, but we can expect that once the failures to deliver print here going into the end of July, which we're going to have to wait until the end of August to get that print. All right, we need to kill this bot here. Can I get a mod to kill that Bitcoin bot account, please? Off with his head. So guys, I already covered that BBIG doesn't have any new info. Okay, it's not that's not up to me. The exchange halted it. All right, it's a T12 halt. They have to wait for information coming from Zash and BBIG presumably. We don't know what's going on. There's nothing else I can tell you. All right, so looking back at Excela, the other thing that we can look at is that cost to borrow is going up very rapidly. So this is getting more and more expensive for shorts. And now there's a struggle, the fight going on for shares to be returned right now. So right now we can see that shorts are either fighting to return shares or somebody, most likely a market maker based on the on loan shares, are trying to figure out where they can go get shares from so that they can deliver on their obligations for FTDs. So while it's not indicative that a short squeeze is any kind of a certainty, Excela is obviously very heavily shorted, and now they're about to announce, once they get past Monday and close above $1, that they're no longer at risk of delisting, and Nasdaq will tell them that they're back in compliance, and that will turn things around. And then shortly after that, on August 11th, they're announcing earnings. So if their earnings are really good, then short's thesis is basically destroyed. If they issue a profitable earnings, that is my ideal bull case. If they announce profit on their earnings, it will shut down short's thesis completely. The company will suddenly be taking down its debt, making money, and they will be able to get out of their short-term debt liabilities much quicker than anticipated. And they will no longer need dilution in order to stay afloat. To everybody that has been hanging on for all this time, if there's anybody that's looking at this video after the fact that is thinking about like, oh God, what did I get myself into? Why did I buy Excela? Just hang on, all right? It's okay. It's okay to make a bad trade and to learn from it. But at this point, look at things as they're going on objectively and try not to hold on to that emotional mindset, okay? There's opportunities that are available, even if you have lost money on a stock. And I understand that's painful. I have lost money on AMC. I've lost money on BBIG. I've lost money on Biora. I still went back to those stocks whenever I saw those opportunities. I still went back. I don't revenge trade. I don't trade against stocks just because they've hurt me in the past. I don't fight the trend just because I don't like what happened before. I look at the opportunities and I stay objective. You put the emotions aside so that you find those opportunities. And you can disagree with me if you want to. That's totally okay. I won't fault you if you think that Excel is a bad pick. But I think it's a good pick. These are the reasons why. And that's entirely up to you to make your own decision and trade accordingly. Okay. Alrighty. Let's go ahead and head back to the charts. I want to catch up with everybody else. You know what? Yes, I do actually want to look at Redbox. Redbox started to show some consolidation on the 1 hour chart that I was interested in. Ooh, I didn't even see this. This butterfly pattern is interesting. So this is a bullish cipher pattern called a bullish butterfly. It's based on fib retracement, and it shows that there's support down here, and it's now made a double bottom. So the fact that Redbox is printing this big green candle right now, very bullish. I actually might expect this thing to start running into close today. That's very good. Look at it go. Holy crap. Holy crap. Look at that volume. Y'all, you're all seeing this? Redbox just printed this huge boom boom candle. It opened at $3.96. It's up 4% right now, and it's still going. Look at this volume candle. Holy smokes. Redbox, what are you doing? Is there a newswire print on this? If somebody in the chat is able to go do a little bit of rapid fire Googling, I'm interested in what the heck is causing this. Redbox is suddenly moving. What is happening here? Let's go move down to the 1 minute chart and actually see what's happening. 194,000 shares in a single minute. 94,000 shares and counting on our latest minute. This is a 3 white soldiers pattern printing right here. We're about to print a 3 white soldiers pattern on the 1 minute chart. This is a huge reversal pattern. Man, look at this volume. This is strong. Holy cow. It's not the largest volume that we've seen so far, but this big print is nice. Touched a liquidity pool now. It just broke a liquidity pool. Be careful here. Dude, I don't know what the hell Redbox is doing right now, but man, this is awesome. What in the hell? Redbox. What is happening? What is happening? Redbox is
Revlon
halted.
just printed a huge volume candle.
What is going on? Revlon's doing it too. Revlon just printed a 95,000 volume candle. What? It's not the largest candle, but this is actually competing for the tallest minute candle at open on the 5th, or from the morning today. What is going on? Whoa. Dude, what is happening? The last 30 minutes of this day are getting interesting. All right. All right, for those of you who are looking at BBIG, I'm going to show this to you, okay? I'm going to point this out to you right now so we don't have to revisit this, okay? BBIG is sideways. It is suspended trading as of 10:44 Pacific time or 1:44 p.m. Eastern time, August 4th. It hasn't traded at all since then, all right? There's nothing happening. There's nothing happening on BBIG. We got to wait for the Nasdaq to open it back up, okay? That's it. What in the heck is going on? What is going on? FFIE? Nah, FFIE ain't doing it. FFIE it's got a little bit of volume coming in, but it's not like Redbox. It's got a little bit coming into it. What in the heck is going on? Well, Redbox is halted right now. Revlon printing some nice candles above $8. Dude, this bot is pissing me off. Get out of here. All right. Now that we got that taken care of. All right, Revlon is it's throwing some volatility right now. Implications of a $8 close on Revlon would put an additional 5,000 contracts in the money on the call chain. Actually, it's more like 5,800. So that would actually, yep, that's a good close for Revlon. If it's able to close above that level, then that would drive about at least 6,000 shares worth of purchasing going on. I don't have all of it counted up. Margin call, I don't know about that, but it's very bullish. If you have all of these contracts expiring in the money, that would obviously be great for the bull case on Revlon, because there's only more calls coming up in the following 2 weeks. So it's getting a little bit of weakness right now. It's fighting for $8. Above $8 would be great. It's not the most critical, but it would be nice. We've only got 30 minutes left in the day. The volatility's got these contracts pretty expensive. It's probably not worth the day trade at this point.
OCC memo alert, Tesla Inc. 3-for-1 stock split.
Oh, is the stock split going into effect next week? That would be lovely. Honestly, I would be very pleased for Tesla to split their stock. That would be excellent. A stock split on Tesla would make me a happy, happy man. All right, Redbox, where are you? Are you going to come out of your halt or what? Where are you going, Redbox? Where are you going? Man, this is an interesting day. All right, let's go get the 4-quadrant chart up here. We've got Redbox, we've got Biora, Vinco's not doing anything, Excela. Move that to the 10-minute chart. Got to watch what Redbox do. There we go. There, now we got our ticker symbols in the background of our charts, so we know what we're looking at.
Why is it still halted?
How long has this been? How long has this halt been?
It's been over 5 minutes. It halted on 29.
This shouldn't be halting anymore.
What is happening?
It was a 5-minute. It moved. Okay. Well, it did move. It did move more than 15% in 5 minutes. So this might be a 10-minute halt. This could be 10 to 15-minute halt. So Redbox may not be coming back after this. I don't know. We'll see. But we'll pay close attention to it. All right. Excel is basically barcoding. Man, this is silly. I like this. This is hilarious. AMC is just so strong. Look at it. Oh my God. Look at that bull pennant. Oh, it's so beautiful. Look at that 15-minute bull pennant.
Oh, Revlon! Broke the wedge. 813.
Wow. All right, there it is. Yep, broke the intraday wedge. Moving up on strong volume. It's possible this could be a liquidity hunt to the downside, but let's just see what it does. If it breaks and holds above 820, then this thing could keep moving. Let's see if Rev breaks out. AMC is consolidating into a very strong pattern. Nice big bull flag. It needed this pullback. AMC needed this pullback to cool off. This is a good sign. Consolidating into a nice little descending wedge. Let's see AMC move a little bit sideways, a little bit going into close. If it can stay this strong going into close, then I will be very, very excited for AMC going into next week. Redbox's chart is Still halted. Excela's barcoding. It's not much to see.
There
here.
goes Rev.
Oh, there it goes. Yes. All right. Wow, Revlon. Oh, that's it. It's gone. It's gone. Revlon is out of here. Revlon is out of here. It is gone.
Friday squeeze day.
The day that memes crashed the market.
Whoa.
Wow. Watch Revlon get halted for the rest of the day now. Holy crap. Do we have any newsprint on any of this? Nope. Y'all, I think that shorts are having a liquidity crisis right now. Things are completely out of hand for them right now. They've spread themselves way too thin. All right, I'm gonna go over this. I'm gonna go over this like very brief. I'm gonna go over this very brief theory that I have going on. All right. Let me write this down. I want to grab the timestamp.
Red box is open.
There we go.
Gapped up to 539.
Holy shit. Holy shit. Congratulations, everybody on Redbox. Congratulations, everybody in any of these. Well, not Excela. Excela is still barcoding, but we'll see what happens.
Whoa! Whoa!
All right, dude. Oh my god. Oh my god. Holy cow. 560. Redbox moved. Since the beginning of this move, it's up 35%. It's going to close 35% green on the day. After an entire day of nothing, just pure nothing. Holy crap. This is awesome.
Yeah, why don't we just take a look at Redbox? I don't know.
All right, guys. I'm going to go over my very brief theory here of what's going on. So I was talking about collateral needing to be posted by brokers. And I think that what has been going on, so actually first let me go over what that actually means. So brokers have been lending out naked shorts theoretically, right? So whenever they have to lend stuff out, whenever they do any kind of lending, there are liabilities that get added to their books. And what that causes is for them to need to purchase collateral to serve as a equity value to post up against that loan. So brokers are making money off of the loan itself, and all they have to do is just have something sitting on their books that has intrinsic value and is considered, quote, safe. What they tend to do is they buy T-bills. T-bills are just U.S. treasuries that are less than 1 year to maturity. They're considered safe because it's backed by the U.S. government. And the thing is that the price of these T-bills has been going up like crazy. The yields have been going down, 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 which means that the returns on T-bills is basically like nothing. It's almost zero. But the banks and the brokers, they don't care because what they want them for is collateral. This is a theory that I've been working on with Tempestuous Persephone, who actually did a lot of the research ahead of me. And the theory is that because they had to get all of this collateral together in order to set it up against all of the naked shorts that they were posting, and now that collateral is starting to get more and more and more expensive, and they don't have enough, there just aren't enough T-bills in circulation for them to collateralize everything that they have sold into the market. And this is on top of other things like bad loans, anything that they're defaulting on, like if they're defaulting on MBS or car repo loans, title loans and things like that. All of this bad press in the market it's increasing the need for collateral. And that counts against short plays. So whenever the brokers are lending out these naked shorts, if they're using up their collateral for everything else, then that puts pressure on them to cover or force their customers to cover all of their short bets. And I feel like this is starting to happen. This crisis may be playing out in front of our very eyes as the entire market is crunched for liquidity and collateral. This is actually something that happened back in 2018, where the market had a brief crash due to a collateral crisis, and the reverse repo facility on the Fed was shut down for a brief period of time, and it caused a hang up in the entire banking system, and it basically halted everybody's ability to make overnight repurchase agreements, which is how they get their T-bills. So this is just like it's a really rough working theory that hasn't fully been tested. But seeing that all of these stocks, all these meme stocks, are running at the same time, and if they do end up squeezing all together, which would be crazy and phenomenal and so exciting, believe me, but for that to actually be caused by margin calls, recalls of rehypothecated shares, short covering on naked shorts, all of it is related to the brokers and the banks that are undergoing this liquidity and collateral crisis at the same time. And I actually saw a tweet from BAM Investor, Jim Savolti. He was actually mentioning that he was of the same mind that all of these different brokers and dealers and the market makers were trying to throw out all these shiny objects, distracting retail in different places by causing all these other stocks to run and attract them into it. And his theory was that they spread themselves too thin. And I actually kind of agree with that, especially when, in order to engage in all of this naked shorting, they have to supply collateral. And if all of that collateral gets too expensive to hold on to, and they have to rehypothecate it, if for any reason, if anything goes wrong, if one bet, just one, gets out of their control, then they lose that collateral. And that means that they can't post that collateral against anything else. And it's like the first domino to fall in the entire chain. I'm beginning to feel that because AMC was the first to run as a result of this news, that Adam Aron was issuing this equity dividend, that it is beginning. That was the first domino to fall, and what we are witnessing now is a squeeze of memes all across the market. It's too early to tell yet, and it's not something that I would bet my life on, but I'm really excited to see where we go for the rest of this week.
There's only like 15 minutes left.
Man, what an exciting close to the market, man. This is a hell of a day. All right, so since we got 850s on Revlon that are threatening to go in the money, oh my God, if this went to $10, then holy shit, I shudder to think what the squeeze will look like next week. This Friday close is everything for Revlon. If it closes above 850, then that's going to put even more options in the money. That would put an additional 2,623 calls in the money. That's 260,000 shares. Would BBIG have squeezed if it wasn't halted? Dude, BBIG might squeeze harder because it is halted right now. They can't get out of their positions in BBIG. BBIG could be one of the most explosive ones if what I'm saying turns out to be true. It's just a theory, and I have no idea if I'm anywhere close to accurate. But if they can't get out of their positions in other stocks and this all takes off out of their control, it can cause the other ones that they can't get out of to unwind even faster. And that volatility can send the price skyrocketing faster than they will ever be able to cover. And the thing with BBIG is we know there's a market maker that's playing games. The fact that this got halted might actually work against them hard. This could be actually an incredible this could be an incredible development for BBIG and any other stock that they can't get out of. This may just be the beginning. BBIG is still it's going to be halted until the exchange decides to let it be unhalted. But I don't believe in coincidences. The fact that AMC started running and then all of a sudden Biora, Redbox, Revlon, Senseonics, everything in my meme plays is running right now. The only thing that's red is Excela and AbbVie, which isn't even a meme stock. I don't even know why I have this in here. Everything is running right now. Absolutely everything. The only thing that's red is the fucking SPY stocks. Everything in the SPY is red except for JP Morgan. Barely. Let me look at my indexes. Yeah, the Nasdaq SPX is down. For whatever reason, the VIX is down incredibly. The Qs are down. UPRO's down. The Dow Jones is basically break even. My dudes. AMC's consolidation looks good. This is good. This is very good. Y'all, it's time to get fucking excited. You can thank Adam Aron for what he did. I am absolutely convinced that that man knows how to run his business. I'm not one of those. I'm not like the ape that goes like foaming at the mouth for whatever CEO represents my stock. I think that Adam Aron as a person is an incredibly intelligent guy. He does know how to run a business, and I base that on his history. He was able to save a dying cruise ship line as his first role as a CEO. That was his first role as a CEO, and he saved a dying cruise ship line from Norwegian Cruises. That's an incredible turnaround. That company was in a death spiral, and he turned that thing around in less than 5 years, and it made it one of the most profitable cruise lines basically overnight. He did that so quickly. You think that he can do that to a dying cruise ship line, and he can't do it to a movie theater, the most popular movie theater chain in America? You're out of your mind. This guy does know what he's doing. I'm absolutely convinced that Adam Aron knew what he was doing when he issued this dividend. The timing just had to be right. That was an incredible second quarter earnings. He crushed the box office numbers. They crushed their concession sales. They crushed their other investments. Highcroft is about ready to pan out for them. According to Adam Aron, he's confident that it'll pan out in the next year. That's all good news for AMC. Man, Revlon's consolidation looks strong too. Man, this is an exciting ass close. Look at this. Look at this. Wow. It's a long tail. It's a long tail, but it is a pennant. On the 1 minute anyway. Revlon's looking strong. AMC's looking strong. Excela's not doing anything. I'll go ahead and move to GameStop because GameStop was having a nice strong day as well. There's even a cup and handle on GameStop, as a matter of fact. If you all want to check this out. Cup and handle. Wahoo. You got to see a breakout above this price level. It's got to get above $40 and about $40.30. Got that bot back again. Get the hell out of here. Okay. All right. Man, this is a great day. This is a great day to be an ape. This is a great day to be an ape. Y'all, I hope you guys are banking right now. I'm looking forward to see how that SQ's bet plays out. All right. Let's check out. Okay, I saw somebody was asking about GovX. That was GeoVax Labs. Well, let's see. Oh, you know what? It looks pretty bullish, actually. It's the one thing you have that's against you is you have this tilted head and shoulders pattern. Shoulder, head, shoulder. But it's setting up for a broadening wedge pattern as well. So this could be getting volatile. The monkeypox thing is actually pretty. The whole monkeypox deal is pretty important right now. It looks like you might have some more downside for another bounce off of this bottom of this trend line, but yeah, there's possibility it can move between these two channels. In the short term, what you need to see it do is break above this trend line to show continuation. If it breaks below this trend line, then that would be your bailout point. It'll probably be coming up to about the 200 period moving average, at which point you could try buying the dip if you see that confirmation of it bouncing and reversing. All right, let's check out
there
AMC.
goes Amy.
Oh, there it is. There it is. AMC. AMC. Look at that. Oh, the strength in her. Look at how strong she is. She's a beautiful lady. Revlon is still printing that tail on its pennant. Biora is still holding up strong. It's also forming a bull pennant. Let me go ahead and take the liquidity away and put this on auto. You can see Biora printing this bull flag. I'd expect it to continue consolidating to this point until it breaks out above this trend line. But it is bouncing off of its 50 period moving average, so you might get another step up here. Keep an eye on it for it to catch a bounce. Let's go back to this. Redbox consolidating very nicely. Nice flat tail. Revlon retraced a little bit harder, but it's still holding up support. As long as it closes above 8, I'll be super happy. If it closes over $8, anything above that is just bonus. AMC is like, I cannot be upset with AMC right now. I'm so thrilled. I'm so glad that I own AMC right now. I'm happy to be an AMC shareholder right now.
SIGA is another monkeypox play that's up like 19% today.
What is the great green indicator between the two EMAs? That is called the RD or the Phoenix. If you want to look this one up, you can find it. It's called the Phoenix 1.0. All it is just it's a momentum indicator that shows green if the trend is bullish and red if it's going bearish or consolidating. If it's like bright green, then it's very bullish. If it's dull green or red, then it's consolidation. Basically, it just helps me trade with the trend. It's known as the RD or the Phoenix. You can search that on TradingView and you'll find that one pretty quickly. There's AMC's breakout, man. Oh, dude, this is so beautiful. All right, Revlon. It's Revlon's turn now. Get up there. Get up there. Close above 850.
And green.
Close
Go
above
Rev.
850. Go for it. Go for it, man. Hell yeah. Oh, hell yeah.
Oh, Rev.
I need a soundbite of Jenna Marbles just going, oh, hell yeah.
So if it got halted in the close, would it open at 4 o'clock after hours?
I believe it should. Yeah, if it got halted going into close. I'm not certain of that. Oh, wow, Revlon. Look at it go. Holy cow. Dude, if this thing closes above 10 before close, that's going to put so many options in the money, man. This is a massive blow against shorts. Oh my goodness. Revlon. You make me so happy. Oh, you don't even know. Oh man. Even Weber's getting a pop. Wow. What a
No
beautiful day.
way.
Somebody said
Go
it
Weber.
in chat. Weber, what's Weber doing? Oh my god, it is.
Weber is ripping.
Wow, Weber. Everything is squeezing at the same time. Dude, all these shorts are getting
Wow.
smashed right now. This is what I was talking about. This is the liquidity crisis that I was talking about. All these things are moving at the same time. Wow. What a day.
And that concludes our moment of silence for the shorts.
Wow. I'm just so gobsmacked right now. We're going into such a strong close. This is it. The final countdown. 15 seconds on the clock. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Ding, 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 ding. That's the
Red
bell.
closes above 5.
All right. Revlon has a close above $5. I'm sorry, Redbox close above 5. Revlon close above 875. AMC closed at $22.15. We gotta catch everything else. I gotta go look at everything else that closed today. All right, let's see. AMC's close. Is this showing me after hours? Yeah, this is showing me after hours. I just want to see the regular close. All right. AMC 22.18. Biora 83 cents. BBIG still halted. GameStop $40.02. Redbox $5.02. Or I keep getting Redbox and Revlon mixed up. Redbox $5.02. Revlon $8.60. Sensionics $2.11. Weber $7.48. Y'all, what a close. What a close. Shorts are getting obliterated right now. Wow, what a day. My boss just messaged me asking if I still have BBIG. Oh my god.
That is
Wow.
that you need to frame that. Print that out,
hilarious.
frame it, and put it on the wall.
Oh my god. He asked me if he should be concerned or excited. I just told him that I'm actually incredibly excited. I haven't shut up about the stock market. Wow, what an amazing close. I'm just so stunned into silence. All right, I'll hang out for a little while, chat. We can just talk back and forth if you all want to go ahead and take a look at some other things. I'll be happy to do some very quick TA or answer any questions that you may have.
Is AMD up right now, or is that one of those weird candles?
AMD, that's a good question. Let's go take a look at some of these others. All right, AMD. Oh, I need to go pull up. All right, where's the chat? Let me go into live stream questions. If you guys want to send me a question or any messages in particular, go to live stream questions just because that's oh my god, that gif. All right. If you guys have any questions, post them in live stream questions, not live stream chat, because I'm watching live stream questions since it's like, slowed down. Thoughts on MMAT? Not really tracking MMAT, but I can take a look at it really quickly. Does look like it's moving pretty nicely in the short term. Let's see. All right, so it printed a butterfly cipher pattern on the 30-minute chart. It does look like it's kind of bottoming out, though. It's been in consolidation for a while, but it is still trading in a channel. On the daily chart, let me take away the liquidity because it's messing with the chart setups. Okay, here we go. All right, MMAT, it looks like it's kind of hit a bottom. I don't know what's going to happen, though, going into earnings. The earnings are coming up next week. At the moment, though, it doesn't really have very much for me to go on. Actually, you know what? If earnings are bullish, then this would print an abandoned island pattern. An abandoned island pattern is where you have a sudden gap down that places it below a certain price level and it goes into consolidation for a significant period of time. And then all of a sudden you get a gap up and above its previous location. They call this an abandoned island. This is a bullish abandoned island. So this kind of print is actually pretty common during reverse splits or any kind of like major bearish news. If the stock gets like suddenly slammed down because of a whale just evaporating all their shares to the market, and then it goes into consolidation pending some kind of news, then as soon as the news hits, the whale buys back in and the price resumes back where it was. So it's an excellent position to average down in or to scoop up shares at a discount if you're bullish on the company for the long term. These typically play out over the course of several weeks or up to a month. Thank you, Inner Beach Bum. I really appreciate that. They said best live stream. Is there a Neo earning? Neo earnings. Neo earnings are in September on the 27th is what they've currently got scheduled. Cool thing that you can see here is that you have a 50 crossing above the 100 moving average. So it's actually entering into what could be a bullish pattern now. If you get a you could wait for the 50 to cross the 200, but you've kind of missed the move at that point. It's got a nice level of support here under the 100 period moving average at $19. So it's actually got a really nice setup. I'm not super bullish on the EV market just because I feel like the used car repo market is about to explode. But yeah. I'd say it's actually a pretty reasonable bet. I just would expect to be holding on to it for a long time. A couple things that you got going for you is you have this nice setup here. This actually looks to be forming a parabolic arc pattern. This is actually a pretty rare pattern in the market. I've only seen it a few times. AMC did it once, but it didn't pan out. But what you get with this with a parabolic arc is you get this step up pattern here, and it follows a curve, and then it suddenly retraces. Suddenly, it finds support and then takes off very rapidly. And the chart pattern looks just like this curve. It's a step up, a slow curve up, sudden drop down, and then a massive swing to the upside. And if you do end up with that pattern playing out, then you would almost certainly break above this 2450 level that it had met resistance at. That would put you right about at the 200 period moving average. And if it crosses above the 200, finds support above it, then that's your confirmation for long-term continuation. All right. Let's go track a couple of things. My boss is so excited right now. He's like, oh, good. Oh, dude, this is too funny. Can I talk about the gamma on Revlon going into next week? Yeah, we can go ahead and talk about that. Let's see. Do I still have my Revlon chart up here? Yes. Okay, I do. So we'll go take a look at Revlon. This is the Revlon live options. So the big date is August 19th. I'm actually placing bets for August the 26th expiration. So that's the week after. The reason why I do that is because if for whatever reason this doesn't pan out, then I give myself a whole nother week to get out of my positions. And if I see that this is breaking down, I can kind of escape intact with a little bit of theta left over. If you wait until only the August the 19th and this doesn't pan out, or if they pin the price just below, then you won't have a chance to escape your position without taking a massive loss. So I still hedge my bets, even though I might have supreme conviction in my thesis. I still hedge my bets, no matter what I'm doing. I'm always taking risk into account. So always be managing your risk. That's a very important lesson that I've learned in the market. If you do not manage risk, you will get yourself killed and you will blow your account so quickly. So the big price to beat is $10 on Revlon, which it is so on track to do. Look at it moving. Look at it moving. It's such a beautiful thing. Look at it in the extended hours, and it's consolidating into this. It looks like it's an ascending wedge or an ascending triangle. All right. So Revlon has now just printed an ascending triangle pattern going into after hours. So Monday is going to be huge. Gonna be huge. This is only on the minute chart, so that's just a bunch of noise. All right, cancel that out. The important thing is that we got back above this support. So the resistance that we had here, we had been running into some resistance on Revlon as a result of this hammer down that we had on the 4th. We got punished down here, and we broke through this triple top pattern. Now we have a close far above these wicks here and here. So we've broken that triple top pattern, which is normally a bearish pattern. Since that pattern has been broken and we've established support at $8.50, now we know we've gotten our confirmation. Revlon is ready to move. Sorry, I wasn't showing the correct chart, but I'll repeat it here. This was the 1 top, 2 top, triple top, and we broke the pattern because you get this green close above the wicks on the last 2. So wick here, you got a green close on this candle right above that. So that's an excellent bullish signal that the triple top pattern has been broken. Let me go ahead and get the short squeeze gamma ramp for Revlon printed, and we can look at that too. So this is the most exciting part. This is what truly tickles my pickle. This is the Revlon gamma ramp chart. And what you can easily see is that right now, at a market price of $8.78, where it closed at, there is about 44.7% of the float in the money. That means that all of those calls that expired at $8.50 or below now must have been purchased. Those shares are due by T2 settlement on morning open on Tuesday. So all of those shares that have not been purchased yet are going to be delivered to the hands of shareholders that exercise their calls by Tuesday. That means that any calls that haven't been purchased first thing in the morning on Monday are going to need to start being purchased in order to prepare for that settlement. The next step is $15, at which point 100% of the float will be in the money. If Revlon squeezes past $15, this thing can explode to unimaginable highs. And I don't want to sound too hyped and like at the risk of sounding like what everybody accuses me of being a pump and dumper. I'm not a pump and dumper. I just look at the math. 100% of the float in the money at $14. That means that above $14, there's not enough stock in existence for Revlon to actually cover all of those calls. So you know that they're naked calls. So whoever sold those naked calls are completely fucked. Just look at the math. Just do the math, okay? It's not hard math. So every dollar above $14.50 is just more shares that are going to have to be delivered that can't be delivered unless they rip them out of the market at whatever the market price is. And at that point, they're taking huge losses. Huge losses. So at the risk of sounding like a hype maniac, I think that Revlon can squeeze beyond $20. And that's going to result in 150% of the stock to actually go in the money. This thing can get so ridiculously out of hand that market makers can lose millions of dollars on this stock, which only just a few months ago announced it was going into bankruptcy. And if that is an irony, I don't know what is. It is the most hilarious, most delicious irony to see Wall Street getting punished, just absolutely kicked in the gonads because they decided to pile in on a stock that was representing the largest makeup brand internationally for the last 40 years that just very briefly had a bankruptcy scare. It's so beautiful. Revlon has already put so many options in the money now. The delivery is going to absolutely throttle shorts. And this is starting to happen elsewhere in the market too. So at this point, I'm pretty much convinced that we're experiencing the liquidity crisis that we've been talking about. This could lead to the major squeeze of January all over again. Like everything that we said was going to happen is starting to happen. Everything that we have talked about might be proven right here in just a short amount of time. And I don't want to get everybody like into this mode of like YOLOing all their money into it. Just drop a little here, drop a little there, manage your risk and pick your bets carefully, but don't throw everything you have into one play and especially don't throw everything you have into all plays. That's stupid. Don't do that. But look at what's in front of you and take calculated risks according to the thesis that you have set for yourself. Do your own research, do your own due diligence, and you will find opportunities here. Right now, it looks like AMC, Revlon, Redbox, and GameStop are all strong candidates. I've also got bets on Biora, which is moving very strongly. It's not squeeze quality quite yet, but very nice, strong moves. And we're seeing all kinds of other meme stocks that are moving similarly as well. So this is my squeeze picks. This is my big squeeze watch list, and I've got basically everything on it. So AMC is moving, Redbox is moving, Biora is moving, and I have no doubt that BBIG would be moving if it was actually unhalted. I don't have Rev on this one because I haven't been using this list for a long time, but we'll add it in right there. Okay. Weber actually got a pop at the end of the day as well, so that's all very good and exciting. All right, let's check out what chat has going on. Oh, Carvana Bamboo. Yes, I can go ahead and go over Carvana. I was actually bullish on Carvana, but I missed the boat. So Carvana had a really nice move after earnings. It was actually a negative earnings, which surprised me. But the big deal with Carvana is that they bought out a car repo company, an auction company. So now they have access to to a business which is used to collecting cars on repo, and now they can basically move They can move to the used car market and push all these repossessed cars into their vending machine, basically, and sell cars in the used market now. They no longer have to sell brand new cars. And those car vending machines are well suited to the used car market. What I suspect is that they announced some very good guidance. And honestly, I'd be bullish on Carvana going long into the future at this point because they've settled a lot of their debts. And I mean, Jesus, just look at their chart. Like, holy crap. Their chart is absurd. It's hilarious, actually. But this is the bottom that they had at the COVID, at the peak of the COVID crash. Like, this is definitely the time to be buying. Honestly, I wish I had been buying while it was down at $22, but I just wasn't sure if they were going to get out of their financial problems. And literally every analyst, everybody that I was looking at on Wall Street that was looking at Carvana said that it was a dying company and that it's going nowhere. And I probably shouldn't have listened. I was like very cautious about going into it, and I decided that, you know what, after their earnings, I'll go ahead and I'll take a position. I just want to see what their performance was. And well, I guess I missed the boat because Carvana took off like absolutely crazy. It's a huge move. In just the last week, it's moved from $20 to $47. That's like almost a whole 100% move. HYMC, I'll take a look at that one as well. Sure. So HYMC, mostly barcoding, it looks like. I'm not really sure what I could tell you. In the short term, you have this bat cipher pattern, which has played out to the upside, and that looks like that closed in after hours. Their earnings was a little bit further down from expectations. They missed by 4 cents. So not the end of the world for them. Overall, what you have going on here is what looks to me like a descending triangle. So you have this big area of support here that it's been holding steady on, and this descending triangle is forming a descending trend of resistance, and it's having trouble breaking out. Now, these patterns are typically bearish, so what you expect is if it breaks down below this level, then it's coming down. But if it breaks out above and gets above that trend, and then it'll have to test it. So what you'll see is it breaks up, it retests this line, and then continues. If you see this, then that's your confirmation. And once it breaks above the high point of wherever it reaches, once it breaks past that wick, it needs a positive close above, and then you know that continuation is happening, okay? So those are the two scenarios. The more likely scenario is that it breaks down below this pattern, retests, and then comes down, okay? So that's how you trade a descending triangle like this. But since Highcroft is tied to AMC and it's part of AMC's investments, you might be pleasantly surprised at the likelihood that this breaks this pattern to the upside. But just giving it to you straight, letting you know what the possibilities are in either direction. Let's see who else in chat was looking for stuff. How does my chart show E for earnings on stocks? You just put it on the daily or the hourly pattern, hourly candles, and you'll be able to see it. I got a request for QNRX. This is Quan Pharmaceuticals. What the hell? Oh, it's a split. They reverse split? They did. They reverse split. I don't know how to tell you this, but I would not be touching it. to be honest with you, just on the chart alone. They're offering ordinary shares and pre-funded warrants. Their stock plummeted 6 hours ago. So they squeezed and then they diluted. How unsurprising. The company, I would give it time for things to calm down, honestly. If it's a company that you believe in investing in for the long term, then by all means, it's your money. You can do with it what you want. But if you're expecting it to make this move again anytime soon, I'm sorry, you're gonna be disappointed. Prox GT, shout out. As someone in the car business, I can tell you it's getting hairy. I appreciate that. The Carvana situation looks very bullish for me just because of that reason alone. General Disarray asks, is this what you call a death cross with a candle passing super trend? No, that's not a death cross. A death cross is, let me go ahead and pull this up on, we'll see this on the Nasdaq pretty easily. Let's look at the Nasdaq, and you go to the daily candles. A death cross is, let me hide some of this stuff. Dude. Okay. Clean some of this up. All right. So what you are looking for when you're looking for a death cross is any cross of a 50 period moving average below a 200 period moving average. So all of these lines that you see, this line graph, are my moving averages. I have the 9, the 21, the 50, the 100, and the 200 in order from white to blue, green, orange, red. All right. So what you're looking for is this cross. This crossover between the 50 and the 200 is the death cross. Now, these are smooth moving averages, if I'm not mistaken. Yes, these are smooth moving averages. So smooth moving averages are going to show you a little bit of a weakened bias. It's a form of an exponential moving average, but really what it does is smooth out the trend. Traditionally, when you're looking for a death cross, you're looking to use an exponential moving average or a simple moving average. For the EMA, the death cross occurred back on March on the Nasdaq on March 2nd. So this would have been the death cross right here. And as you can see, if you had actually traded this death cross and gone short, then you would have made some short-term profit, but then the market reversed on you, and then you had this suckers rally that went above the 200 period moving average, and only after that did it retrace. But that is how you would traditionally trade a death cross. When you see the death cross printing, you go short. And then you take profit at, you either look for a, like you trade it based on the MACD, looking for like the MACD to cross back up. So MACD crossing up actually would have given you a near perfect exit. So you had the death cross here that happened on March 2nd or March 3rd, and then your exit would have been here on the 16th of March, right where the MACD crossed above, and that would put you here. You would have exited here at the top of this candle. So that would have given you your exit if you were trading on daily patterns. Death crosses can happen on any time frame, but the traditional one is 50 crossing below the 200. And the golden cross, that's just the opposite. That's when the 50 crosses above the 200. So that's how you trade a cross. I don't really trade crosses. I just look for, I use them as confirmation of a reversal pattern. That's how I use crosses. I just basically use them to let me know if I'm right about my bet, but I've usually made my entry long before the cross occurs. Hope that answers your question. That's actually a really good lesson. I'll add that to... I'll see if I can add that to the trading school as a clip. Thanks very much for the excellent question, Disarray. Much appreciated. All right, I'm just about out of time, guys. Let me go catch up with chat and see if I can and see what I can find. All right. Hey, Sleepy Joe, no problem. I'm glad that you got out on a green day. Let's see, what's the skinny on BBIG? Already talked about it. Still halted. Nothing new. Thoughts on MMAT? I already think I answered that one. QRNX, we covered that one. Tough built. I haven't looked at it very much. I'm not going to do too much TA on it. I think that the move has already occurred, and they started a dilution. So honestly, for me, I'm not really going to trade this one. The good thing that you can look towards is this regression channel is showing some potential upside, but it is breaking below the regression channel. What you need to see is a sudden bounce and a cross above the. I would use 1 hour. I would use the 1 hour moving averages, and this bounce on the 200 period moving average could give you some upside. And what you could do is you could play that to the top of the channel. So this is a big maybe. If it crosses below the 200, then I wouldn't touch it. If it does end up breaking above, if it bounces here and you get back into this channel, you could play it to the upside. So that would be the technical trade on Tough Build. The weird candles past 10 minutes. We talked about this before, but those big spiking candles, we're not sure what they are. We've been theorizing that they're dark pool prints that are printing after the closing bell, and it's just late settlement. But it could be something else. We don't know. Hey, Kelman, was about to sell my red box literally a minute before it started squeezing. Hope you didn't. I hope that you still held on and you got to hold on to that run. I'm so glad everybody is making bank. Everybody should be very happy today. All right. When AMC popped, I was working on Biora and you did not get back to it. Can I revisit? I'm pretty sure I revisited it at this point, but AMC was looking pretty strong going into close. Here it is on the 10-minute chart. I'll put it back on extended hour session. Yep, we're closing on a bull flag. Very good. That's a happy chart. We'll just draw a happy little chart right there. Happy little bull flag. Hope you all appreciate Bob Ross as much as I do. So I'll be looking for that to break out and above going into Monday. If anything, we're probably going to gap up. I'm fully anticipating a gap up. But if we trade down, if it consolidates to the downside, I'm going to want to average down. Hey, Fish. I did a little bit of chatting on QRNX. It looks like they're entering into dilution. I wouldn't touch it. They already diluted after they had that big move to the upside. I would not touch it. Let it settle down. That's just my thoughts. You could do what you want. Already covered by Biora. If you want to look back in time a little bit there, Jeremiah. How am I playing the influx of repos? Basically bullish on Carvana. I've already talked about BBIG, silverback stonks. Thoughts on VRAX? I haven't looked at it, but it was a valid play for the monkeypox vaccine. I do like the idea of another newcomer, but you gotta pick your battles. There's a lot of companies, a lot of pharmaceutical companies that are playing to this hype around monkeypox and delivering a vaccine. Honestly, I'd rather play the bigger names like Moderna or Pfizer or AbbVie if I was going to play any of them. Like mRNA is the ticker symbol for Moderna. I would more or less anticipate seeing one of these companies absorbing one of those smaller ones and pulling in their intellectual property to monetize that vaccine. Because these smaller ones, these small companies, don't really have the infrastructure. At least, not all of them do, and it takes a lot of time to do that research. What's more likely to happen is Moderna and Pfizer are going to come out with their own vaccine for monkeypox just by either buying the IP from one of these smaller firms, which will cause a pop in their stock for sure. But Moderna and Pfizer monetizing, if the news hits, it's going to send their stock skyrocketing and it'll continue to perform. And what's worth noting is that both Moderna and Pfizer have been outperforming the market ever since February, which is a big deal. They've been outperforming the SPY for the last 6 months. So these pharmaceutical stocks, these big healthcare companies, they are outperforming the SPY and the Nasdaq right now. They're a nice hedge against the market downturn. Do be careful though, because Moderna is getting rejected by its 200 period moving average, so it has some downside in its near future. So don't rush into a decision. Wait for a nice dip to get your entry. Bed Bath & Beyond, I checked out at the beginning of the stream if you want to go back and look at that. Projecting. Gamma Ramp. Okay, we already talked about that. Can we revisit ATR in another video? Sure, I might be able to go and revisit ATER. I'm not sure what to make of it for earnings. I'm not sure if I'm actually anticipating ATER to perform, but it has been moving pretty bullishly going into its earnings week, and it is reporting in the evening, so maybe something good will happen, and there will be a chance to average down into a position if you're bullish on ATER. I like this inverse head and shoulders that it made. It actually completed a double bottom pattern right here, and it broke out of a descending wedge. There's a lot of bullish indicators here. You're above the 50 EMA. That's also very good. And on the hourly chart, you had a Gartley pattern that printed here, an ABCD wave that printed, and that one completed. I'm betting that we're actually going to see a cup and handle form here. As a matter of fact, I do see a cup and handle. Yep, ATER, cup and handle. Might see it test this trend line here. If it gets rejected, then it's probably going to have to come back down and retest this price level before it continues on. But if it does end up breaking out, it could end up going on for a bit of a run. Not sure. A bit too early to tell. All right, guys. I can't get to all of these tickers. I think I'm pretty much out of time. I can't go any further than this because I got to prepare for a meeting here in the next half hour. Yep. Sorry, guys. I'm not going to be able to do any more tickers. I apologize. But thank you guys so much for coming in to visit. If you guys want more data on these tickers that we're studying, the Discord can help you out. Absolutely. We've got a huge community of traders, very experienced guys, just like me, who've been trading even longer than I have. So if you are interested in getting more trading education, please consider joining our Discord at discord.gg/Hell's Trading Floor. We're still working through Patreon right now, but we're working on a cutover to a new membership structure. So you're going to get an email from LaunchPass. Just ignore that. We're still setting our membership up through Patreon for now. We're going to get off of that platform soon, but it's for right now. Just ignore the LaunchPass messages. And if you have any issues, just create a ticket in the support and feedback section. Other than that, appreciate you guys hanging out with me. If you're not already a member, and if you haven't done so already, please like and subscribe. It always helps out the algorithm just to let you know that we're delivering you some quality data. And yeah, we'll look forward to seeing you guys in the trading floor. I hope you guys had a beautiful green week, and I look forward to seeing you on Monday. But until that time, have a hell of a weekend.